Good morning. What are we at? Wednesday, July 28th. Um, Sorry I'm a little late. I was trying to get as much coffee in me as I could before we got started. Where's my chat? Oh, there we go. I couldn't find the chat at first. Um, let's see. Trying to get through this chat real quick. Hines, what's up? I don't think I've seen you in here before. Joseph, hello. Good morning. Fluffer's in the house. Good morning. Danny, good morning. Says, I'm thinking it's gonna be a good day. I hope you're right. I really do. Bringing that positive energy, as Fluffer says, though, that's the way to go. Skip, what's up? Good morning. Um, Skip says, didn't know if you watched Al's latest video showing green days when Ortex fails to report updates and red days when reporting happens. I did not, but I saw some buzz on Twitter about it. I'll probably watch it as soon as we sign off here. Um, but yeah, I didn't get a chance to check it out. I still have a list of like 3 videos that I want to watch. Um, Two of them are Al's, and one is that recent one that Tar Heel put up. Also, I saw Tar Heel put up he's going to do the Foresight Capital on Friday. That's going to be pretty fun too. But yeah, no, I've been pretty busy in the afternoons lately, but I got some catching up to do. Um, Shrimply, good morning. Justin in the house. I don't know if I asked you this already before or not. Is that board ass or is that like board in Arizona? Um, just wondering. And Justin says if Wish can do it, we can. Yeah, I did see that Wish started running yesterday too. I want to check that out. I meant to throw that on my watch list just because they kind of broke through that level yesterday. I think, right? They only went up like 1.7%. But yeah, I think we'll be fine. Anyways, good morning, everybody. Arizona, the state. That's what I thought. I wasn't sure. Um, all right. So let's see. Just looking around right now. I mean, Clove is up what a penny right now, but still, it's better than some days where we've seen us down in pre-market. So, Clove looking all right now, kind of trading flat. It looks like early on, no, everything's just kind of been kind of slow in pre-market. Volume right now to start off the morning, 104,000, so not much at all. It's kind of how yesterday started off. Hey, what's up, Tar Heel? Peter, good morning. And kind of same thing. DraftKings up 23 cents. Why do I have MRIN right here? S&P 500 kind of the same too. So looks like everything's kind of I don't want to say slow, but not a lot of action. AMC's another one I want to check out. Actually trading downwards. So, a couple things going on today. I know Jay Powell speaking later on. If anyone knows the time, if you could throw it in the chat, I'd appreciate it. I want to say when I saw it was maybe 11 o'clock, but a lot of times when he speaks, we see couple different reactions, but it seems like at first it's always like that knee jerk sell off, and then things start to bounce back. Um, Something I'll be interested in checking out later. DJ, what's up? VN in the house, and JF, good morning. It's crazy every day seeing these same faces, and you know, Scotty had text me this morning on Twitter. It's not called a text. What is it? A DM. He DM'd me on Twitter and said, "So Scotty, if you're listening, right on, man. Good morning." But he's like, "Hey, I might not be able to check it out today. I'm gonna be a little busy, but if not, have a great stream. I'll catch you tomorrow." And I started realizing, like, man, it's crazy that we have like this same group of people that come in every morning, kind of like we all wake up together and get to experience the markets together. So this is just cool. It's a really cool family and group that we're building here, and I really like it. I know a lot of you guys too. Um, Carry over into Tar Heels stream later on in the afternoon. It's always fun being on the other side and watching um, you know, from that perspective and just kind of like enjoying the chat and all that. So I don't know. Either way, thank you guys for coming in here. I don't know where I was going with that, but really appreciate everyone kind of spending the mornings with me. Justin says, will NASDAQ CLOV oversold help bring new investors, you think? I don't know. It was just kind of weird though to let me see if I can pull that up. I was looking at the article earlier and I was gonna like actually show the article. But then I rebooted my computer and now I don't know where the hell I got the article at. It wasn't in my Webull app. But yeah, I was looking at that earlier. I mean, there wasn't much to it. They were just basing it off the RSI and saying like, it was an article put out by NASDAQ and saying, that CLOV finally is dipping into this oversold territory. It could bring in more interest from people who actually, are looking through those articles for trade ideas and, things like that. But um, I don't know how much effect it'll have on it. Just being totally honest. Levi, good morning. Ago's in the house. Good morning. Um, Brooke says I try to tune in when I can, but work tends to get in the way. Yeah, no, I heard that too. Um, that's the one thing that I'm gonna or I should say, really not looking forward to it. Not even necessarily for the stream, because I think the stream will be fine. I know I've talked about that before, but I got to go back to work in 2 weeks, and so it's going to be back to like my old days of trading, where I'd maybe set my buys and everything in the morning, get my alert set, and then just you're at work now. It's hard to watch the market. So we're like the last year and a half, it's been almost glued to the monitors, or even if I'm doing stuff around the house, I always have, I'll come back and check out how my charts are doing and everything. And it's going to be a little different. It's going to be a weird transition going back to school now in 2 weeks. It says you're replacing me with Coach B. Nah, no, I feel you though. It's like you get used to the routine, and it's an hour and a half, 2 hours in the morning, and it's my routine now too, and it kills me to when you can't do it, like there was some times we went on vacation a couple weeks ago and as much as I love vacation, it's like I still miss doing this morning routine. So Ego says, it felt odd to me that it came out. Is it normal for NASDAQ to post these type of articles? I've seen them occasionally, but I mean, obviously there's like oversold companies every day that kind of dip below that 30 on the RSI, and you don't necessarily see it all the time. I mean, I can also see where if there is a big move coming and they feel that it's on the way, they want to get ahead of it, and then that way they could say, hey, we hey, look, we published this article, we saw that it was oversold. I mean, it could be something along those lines too. I don't know, but yeah, I don't think they report those type of articles like on every stock. But Clover is also a popular stock right now too, so it might be catching more attention. I definitely know we have more eyes on this stock than maybe even 3 months ago. Even though there may not be as many people jumping into the stock today. My speculation, or my what I think, is probably that there's a lot of people kind of sitting back on the sidelines that are really paying attention to the stock every day and waiting to see what happens, and then looking to jump on the ride once it takes off. Couple on my watch list popping off. SPRT, yeah, I noticed SPRT this morning again. I mean, and I was looking at the daily chart on it. And I know I mentioned on here earlier this week that I started pulling up that Fintel short squeeze report, and I've just been like screenshotting it and kind of keeping the information so that I can go back later and maybe break it down and see if there's anything to it. And SPRT is not even on that report today. Let me see if I could, where'd I put that screenshot at? I forgot to label it too. Today's the 28th. All right, I'm gonna pull it up. Oh, that's not even the screenshot. So this is today, and I didn't even see SPRT on there. So I don't know. I mean, not that it has to be a short squeeze, but I know the name's been on here for a while, and I haven't really. I tried looking into it a little bit, and like I was saying, like even with watching Al's most recent video, it's not that I don't care. I've been so busy in the afternoons, I never even got a chance to check out SPRT. Um, but looking at that chart on SPRT, that's where I was gonna get to. It was just crazy. Like it's been some great movement there. I mean, just like a perfect. It looks like it's still even going up. I don't know nothing about this stock though. But at this point, I mean, if I was in it, my bet would be that it's going to at least roll past these previous all-time highs, or possibly look for some resistance there. But that's usually like the target point, and it looks like it's right at that where it closed at the last run up. So, um, yeah, if you're making some money with it, good job. I'm happy for you. Spindrift, what's up? Let's see. Chef Daddy says good morning. Chalk Talk was awesome, by the way. Everyone press the like. Yeah. So the Chalk Talk, if you didn't check it out, and please, guys, if you did, um, go in there and leave comments and just give me ideas. Like, what else should I do? I think the next one I might do it on, and it's probably gonna end up being a couple videos long. Will probably be dark pools, just because someone asked in there, and that kind of seems to be like what a lot of people are interested in right now. Maybe don't understand completely, and I like doing it too because it's gonna make me read up on it and get more information on it and make sure that whatever I'm saying or talking about is accurate. So but I yesterday I did two videos called Chalk Talks with Coach B. If you didn't check them out, and I tried to make them quick, but the first one was just explaining like what naked short selling is, and then the second one was um, what a failure to deliver was, and the instances that they're used, because it kind of ties into naked short selling. And I'm just gonna keep doing these because I feel like, just like little quick reference videos, and then it would also be cool for like someone who maybe is getting into the game a little bit late, and or sits in here every day or in other streams or watches videos and doesn't really understand what some of the terminology is. I think it'd be a good opportunity. But also on top of that, like I said, let's say someone decides to jump into Clove late, and they haven't been sitting in this stream every day or watching some other videos where someone like Tar Heel explains something or I explain something, or doesn't have the time to do the research and read up on it. That's kind of my goal, is to and then shit, if someone asks a topic that I don't know about, I'll do the research and learn about it myself, and try to explain it and break it down. I feel like I excel in that part. Like, you know, once I learn something, then it might take me a while. I might have to ask a lot of questions. I might have to do a lot of reading and digging in. But once I have a good grasp on it, I feel like I'm pretty good at breaking stuff down. Um, so yeah, and I'm always open to suggestions. Let's see. J Pal at 2:30. Yeah, so 11:30 my time, 2:30 Eastern. So that's what time we're gonna get that speech, and we'll see what happens with that. Like, I mean, if we may end up seeing, like I said, a knee jerk reaction from the markets. It seems like that's what always happens. No matter what's said, you'll see the market sell off real quick, and then all of a sudden it'll start popping back. Um, let's see here. Oh shit! So there was an article by the Nasdaq that basically about Clove being oversold. It wasn't much to it. They just kind of pointed out that like Clove was in an oversold state from technical analysis, like hitting 30 on the RSI or whatever it was. But that was about it. Let's see. Christina, good morning. Says there's 51 people watching. Should equal 51 thumbs up. Yeah, let's get those thumbs up in there. Um, let's see. Dave said volume has dried up dramatically. Yeah, we talked about that a second ago, and it looks like, yeah, we're at 120,000 volume still. Um, with 12 minutes, this is probably the lightest in volume I've seen in a long time. And we keep talking about. I know Dave keeps pointing out every day, like that when the bid ask starts drying up, looks like we got some resistance at 810 right now, 45,000, which is pretty big for pre-market. But if we rip through that, then you start getting into what Dave's talking about, where we're gonna start probably hammering through these asks, and we could start seeing a nice rise right now. But that's a big number, 45,000 for pre-market. Um, I know it may not sound like a lot, like later in the day, even though sometimes that's a pretty significant wall there. Michael says Clover's had some significant doji channels. Yeah. Hold on one second. I'm gonna pull up the daily chart on Clover. I started getting too caught in the chat, and I didn't get to that stuff. So I'll pull that up right now. Um, let's see. Spindrift says short interest. All right, I'll throw that on there too. So short interest is a weird one. It's a little bit SMJ. What's up? With short interest, it used to be, and I mean like 6 months ago. My understanding was always it was just the amount of the free float, and you would take the number of shares on loan. So kind of like here, I'll pull up Ortex data and just show you. Basically, this number percent of free float on loan, 38%. That's basically what we have in the free float and how much of it's on loan, which is 43 million shares on loan, and you divide it by the number of shares in the free float, and that used to be your simple short interest number. So like when you get to a stock like GameStop back in January, it was reported 140%. So just to do like simple math, if it was 100 million float, that means there was like 140 million shares short at the time. It's just like an easy equation. And now it seems like, a lot of these companies, and maybe they already were reporting it differently, but it feels like to me it's being reported differently, where now the shares on loan isn't that big of a part of the equation. It's like shares on loan, because we've looked it up before, where this percent of free float on loan could be ridiculously low, and all of a sudden, but utilization's high, and cost to borrow is high, and some other things are high, and that's giving you an estimate or a short interest. So there's some other things that go into it, and I know like Ortex has their own way of reporting it as compared to other people, but I'll definitely dig into that for sure. Maybe even do a whole breakdown on the interpreting the Ortex data, like even what utilization is, what cost to borrow is, all of that. So there you go, Scotty. I gave you a little shout out earlier. What's up? Good morning, Scotty. If you get a chance to listen while you're on your drive, all good. If not, we'll catch you tomorrow or catch you in with Tar Heel later on this afternoon. But thanks for checking in this morning too. I appreciate it. Let's see here. All right, so let's take a look at Clover real quick on the daily chart before we get. Let's scoot this over too. John's in the house. Good morning. Yeah, so we still got this pretty significant kind of sell wall here with 45,000 shares. If we look at the daily chart on Clove, the one thing that I wanted to point out, I know Michael said these doji candles, like ending here if with indecision. Basically what these doji candles mean is that there's some indecision in the stock, right? You see a wick going up to the top side, that would be like, that's as high as we actually went, but then selling pressure brought us back down. And then you see the wick to the downside, means that's as low as we went, but then we saw a bunch of buying pressure that brought us up. So it basically represents indecision. And typically in the thinner it is, the more indecision there is, right? So that means that we only dropped like a little bit, whereas like here in this one, this is kind of still a doji too. You have wick on the bottom, wick on the top, not nearly the same, but it's the same type of look. But the reason that it's not is because you have this nice fat bar in between. These fat bars, that was definitely a red day. That was a green day. This one was like kind of insignificant. You're right there in the middle. Um, and basically, what that's showing is that the market was undecided on this day. So um, typically, you'd want to see green after that to show that, okay, a decision's been made. I mean, that's putting it in like its simplest terms. But yeah, we've been seeing a lot of that. What I really liked to see was, I mean, going all the way back to I think this is July 15th now, so almost 2 weeks. Yeah, we've touched under 8 going back since July 15th, but we haven't closed below 8. So, again, going back to this July 15th date, we touched as low as 794, still closed the day, at what, 825. And it's been pretty consistent from there on. Like July 19th, we went as low as 767, but we finished that day at 833. And yesterday was another day where we dipped kind of low, getting down to 786. But again, closed the day at 805. So to me, we've been pretty strong in holding this support level above $8. I really want to say like we've found a bottom here. That's my thoughts at least. With the RSI being oversold, that usually triggers. Sometimes you bounce off this 30 line for RSI. I mean, that's not to say that we haven't been lower. There's been times in the past where we've gotten down a little bit lower, but we're kind of in that territory right now where we should be looking for a reversal. MACD's definitely starting to like move upwards. These bars are getting smaller. We want this orange line to cross above the blue, and these bars to go green. And yeah, I mean, and then we're all almost looking for that kind of crossover here with the 50 and 200-day moving averages. So, and these are all bullish signals. We're not seeing them on our chart yet, but once they happen, that usually invites more investors to jump in, more retail traders to jump in that aren't necessarily in for a squeeze or an investment. They're just looking to get in and out of the stock, whether it be over the course of a couple weeks, days, or months. Low Work says, been watching for a few weeks. Much respect. Right on. Thank you for coming in. I appreciate it. As always, I appreciate everybody coming in here. Lisa says, have you joined the TRADYTICS Discord? You know what? No. And the mobile version is kind of intriguing too. So let me put that on my list right here. I have been watching the videos though, and I have been. You know what I was thinking about doing too, is because sometimes with these streams, you get there's so much to talk about, and I want to kind of like be in the chat too, and be able to sit here and talk to you guys and not just sit here showing stuff. But even like making a couple videos on TRADYTICS and just like going through and explaining some of the stuff, because that's how I learn by doing. But at the same time, maybe even breaking it down for other people so that they know how to. So as I'm learning a lot of this stuff in TRADYTICS, that's one of the things I want to do is kind of like start making these videos about the software. So that might be something that I get into too. Target short sellers in the house. I know every day when he comes on here, I do it, but I'm gonna keep doing it. Give him a plug. Check out this guy's videos. Follow him on Twitter. He's following CLOV, and he puts out a lot of good information. Coming at us all the way from Belgium this morning. Michael, thanks for joining us. Let's see. Co-creator, waking up late this morning. Let's see here. I miss everybody. Jason, I think I said good morning to Jason already, but if I haven't, good morning, Jason. All right. So yeah, Lisa, I'm gonna look at that Discord today. Because even that alert thing, I mean, I just started getting into Discord for the CLOV Discord, and I enjoy it because like I've got it set up in there, and like you can go in the CLOV Discord. One thing, and not to change the subject, but if anyone hasn't joined the CLOV Discord, it's really cool. There's a chat room where you could just sit there and kind of shoot the shit about CLOV, but then at the same time, you could set alerts on there so that if you want, every time that a YouTube video is kind of dropped about Clove, no matter who it's from, it'll send you an alert on your phone. You could also do the same thing with Twitter. I turned the Twitter one off though because there's just too much alerts coming through there. But yeah, there's definitely a lot of cool features in there, and I think I put the most recent invite in the description of this video today. So um, what's up, B Tip, and thank you. Well, also I should say too, check out Tar Heel Blue if you haven't, and Al Trades. And Tar Heel streams in the afternoon, so definitely support everybody that's putting out these videos, and people on Twitter go out there and retweet. Some of the other guys. There's a lot of people that have been putting out some great information on Twitter that aren't even making videos, but um, we just got to help support the Clove family, and keep spreading the word. Lawyer said this is starting to feel like work, but with a moving unknown payday to come. Thanks for managing. Yeah, right on. It does kind of feel like that, huh? I mean, we don't know what's coming, or when. We just know that at some point this thing's gonna pop, but it's all good. It's fun. With me, I'm a little more impatient, and I've said that before, and that's why I like have to trade a couple other stocks. Otherwise, so and you know what? I'm glad. I don't know why I just thought about this, but um, like I opened up a position in DraftKings recently, and I know it probably wasn't like um intended to be like malicious or anything like that, but like someone went on the video and commented like, you need to stick to Clove. This is what the hedge funds want. They just want us to spread our money out all over the place and blah blah blah. And it's like, I if someone wants to be 100% in Clove, that's all good, and I think it's gonna pay off. I really do. I mean, I really think that that's probably your best bet right now is putting your money into Clove. But at the same time, like for me, and I've been very vocal about this. I mean, I started a very similar position in GameStop back in January, and I'm still holding on to some stuff there, and I'm holding into Clove, and those are my two biggest positions. But I also, like I said, I don't have patience, and one thing that helps me stay patient and helps me not sell my Clove and not sell my GameStop is that I get to play around with the other 20% of my account. It's like my allowance that I gave myself to mess around with so that I could get in and out of other trades. And, sometimes I'm profitable with them, and I get allows me to dump more money into Clove, and sometimes I'm not. And but that's why I only play with the small percentage of my account, and it helps me kind of stay sane. Otherwise, I'd just be sitting here staring at this chart all day, and that's not healthy either. That's the other reason sitting here and talking and participating with you guys in the chat helps too. Um, Coach? What do you think about Gerber slapping fines? You know what? I didn't even really check anything out yesterday, but I did see. Let me see. Was that? Did he already start finding some people? I saw some tweets that people sent out. That I mean, he just started like yesterday or the day before, right? And I mean, shit. If he's already getting after it, great. I haven't done enough research to see like, is it all for show? And what I mean by that is, um, if someone breaks the law and they make $100 million, $100,000 fine doesn't really mean shit, right? Then it's kind of like, you know, um, kind of a cost of doing business. I mean, people at that point you just price that in. If I'm making more money than what the fine is, it's still worth it to break the law. But I don't know. I haven't really like dug into it, so I don't know if is he like really getting after people, or are they just putting on a show? Um, all right, so we did open up. We dropped down below 8 for about 2 cents, down to 7.98. Um, broke through that sell wall that we had at for 45,000 shares that we saw up there earlier. It looks like the next big level of resistance is 821. So this could get pretty interesting. I'm gonna pull up Ortex and iBorrow Desk real quick just so we can kind of see where we're at there. I know I did bring it up when we were talking about that cost to borrow earlier, but so shares on loan as of this morning, 43 million. Short interest is at 23%. Utilization starting to rise. So last time we saw utilization really rise, and I know Tar Heel put out a video about this almost a month ago now or 2 months ago about comparing utilization rates, I think, with like some of the other big squeezes, and how it seems like when utilization starts getting up there, that's when we've seen the biggest movement. So that could be something to look out for. If we start getting closer to like that 100 range on utilization. I'm going to turn this on and just see. I got to zoom out more. But yeah, utilization starting to spike back up. As of today, only 191,000 net difference. We're still early in the day. And then iBorrow Desk, just to take a look, is showing 3.2 million shares. So they're showing a net return of 600,000. So we'll just have to watch it play out. Look like some nice big candles though. DraftKings is that's up 2%. CLOV up 1.5%. It looks like GameStop and AMC look like they're getting hit a little hard. 3%, 2.5%. One thing I noticed yesterday, not to pull away from it, I'll go back to this in a little bit, but early on in the morning, by the time I signed off, it looked like CLOV was kind of trending with the other meme stocks like AMC and GameStop, and then probably around 10, and we'll go back and look at it. It looked like we kind of diverted and started moving on our own path. We went up and broke through VWAP. The rest of them were all trading below. So really, I think good signs for CLOV. That we kind of broke away and we're moving on our own. When the rest of the memes are going down and we're going up, that's always good, right? Grim the Tooth says sport SPRT. I always want to say sport when I see that. SPRT Chendy's going straight to CLOV. Yeah, that's my point too. And I didn't get on SPRT because I didn't. I don't know. I just didn't even know about it. And I know some of you guys were telling us about it for weeks in here in the chat, and some people commented on my video like, go check out SPRT. I didn't have the time to get into it. So but yeah, good for you. I'm glad you're making some money on it. Um Big C's in the house. SMJ says, are we still confident in the squeeze? Yeah, I think so. Um we have two. I am. So we have two things. One, I don't think shorts have covered since we were looking at almost at a high of like 61 million on loan, and then once we fell off that first run up, we were still somewhere in like the 53 million range. And we haven't been seeing, and we've seen nothing but continued short pressure since then. So I don't believe that shorts have covered. If you look at AMC and GameStop, we actually have higher short interest than them right now. I think what ended up happening is how we got. This is all speculation, but what I think is, once the stock got a little bit more popular and prominent, and they saw that there was like retail interest behind it, and the community that we started building, they started using more of the manipulation tactics they've been using on GameStop and AMC, because you know, and which is almost like hiding these short positions, in the dark pools, and some other tactics that they have, and it's where now all of a sudden, because the short interest that we see reported, one, anything over 10% is high, and we're sitting at 23% right now being reported, but all we get to see reported is one, the reported shares on loan that this is all shares on loan that is actually being reported to Ortex. So I don't necessarily think Ortex or iBorrowDesk is doing anything shady. I think it's more along the lines of the information that's given to them. The one thing we don't see is naked shorts as well, right? And we also don't see certain exchanges that aren't reporting to Ortex. I mean, shit, if I was a market, or not a market, a hedge fund or someone, and I wanted to maybe hide how big a short interest is in something, one, you could absolutely go the naked share or naked shorting route, which then no one that wouldn't be reported anywhere. But two, um, I'm sure they have access to knowing which exchanges are being reported to Ortex and which exchanges are being reported to iBorrowDesk, and they could probably go borrow their shares. Not exchanges. I'm sorry, I'm tired right now. Which broker lenders are being reported to Ortex and which broker lenders are being reported to iBorrowDesk, and maybe they're going and borrowing their shares somewhere else that's not part of that reporting metric. So uh, either way, I guess what I'm getting at is my belief is that there's still a heavy, heavy short interest in this stock. And um, yes, I think the squeeze is still on the table. And then on top of that, we also have the gamma squeeze potential, which now that the market's open, we'll go over the option chain too. Um, yeah, Joseph says I got some green. Yeah, maybe we might be have a nice green morning here right now. Um, I'm skipping over a lot of this stuff. Yeah, co-creator's absolutely right. No one's getting the proper data, so we don't get the proper data, and that's basically what it's about. I mean, it's just even the fact that like Ortex can. I mean, and they're. It's not, to me at least. It's not like they're sitting there just plugging in by hand. I mean, this is all computer driven, right? There's thousands of stocks out there. What I imagine happens is every lender is and exchanges and everybody else has these data files that are being sent back and forth, and it's whatever data they're reporting, right? And I'm sure the data files that they're building is based off of what each institution or hedge fund or anyone else that's is responsible for reporting how many shares they have on loan and everything else that they're reporting to those brokers. And so I'd imagine the whole thing is somewhere along the line someone's trying to review or hide data. And but I think like the systems like Ortex, for instance, they're just going off data that's getting updated to them. um so Michael, I think when I looked this morning, I did see an update on Fintel. So I don't know. I was actually going to go over that too, but I didn't want to. So there was no update on Fintel, and that's Michael was pointing out here that I did see some of his tweets, even though I didn't get a chance to check the video. There was a big portion of data missing there, right? I mean, everything from the CBOE wasn't getting reported to Fintel, but that goes right along the lines of what I'm saying. Like even Fintel, I don't think they're compromised or anything. I just think that like they're not getting data reported to them. So then the CBOE wasn't reporting data. Now maybe the CBOE was either trying to conceal the data or they were waiting on data to get sent to them. So it's kind of somewhere in there someone's trying to hide something, but it's really hard to like pinpoint who. Um, but yeah, so this data did show up now, and basically what we're looking at is the short volume. So this information was there. We did see 50% short volume on the 22nd. Um, but even 38%, 35%. So that means the total volume that's coming into the stock that day, um, you know, 33% of it yesterday was short selling. So again, how can you see that much volume coming in? That means all the other volume was just probably buys and sells and things of that nature. But for that much short volume coming in on a stock, and then to think that the shorts have all covered, it doesn't make sense to me, especially when we saw 50% short volume only a couple days ago. David, that's a great question. And you know what? I was actually gonna make that one of the Chalk Talk videos too, because that was one of the very first videos, and some of this stuff I've already covered in other videos, but we can go over it now. I mean, like, but this was months ago, like back in April and May. I may have been making a video about some other gamma squeeze, and I talked about it already. But that's why I wanted to make these Chalk Talk ones to kind of put the information all into one place. Um, so basically, but actually, before I get to that, I just want to look. So the S&P 500 right now is looks like it's dropping for the most part. I'm going to put this on here just so we could look at it, because, and the only reason I'm saying that is because GameStop and AMC are getting hit pretty hard, and we're not, and neither is DraftKings. These two we're looking at here. So it looks like we're kind of doing our own thing. I mean, we are going red over these candles, but nowhere near the downward pressure, that GME and AMC are seeing right now. But the SPY looks like it's kind of coming down too. I mean, it's getting in this oversold territory on a 5-minute mark. So something to keep an eye on. Sorry guys, I'm just don't have my charts over here set up the way I'm used to it. Looks like BNGO's popping right now, up 3.5%. AVXL up 2.75. Those are some stocks that I have smaller positions in, more on the long-term scale. But I gotta start waking up earlier and setting this stuff up before I get in here. All right, so let's get back to business. So anyways, David said, what's the difference between the squeeze and a gamma squeeze? Can they happen in either order? So yeah, so basically a short squeeze, and I think, for the most part, a short squeeze is you have this stock that's heavily shorted. So you have people that are betting against it. As the stock price goes up, anyone who's short the stock is losing money, and at some point it's going to hit like a pain threshold for them, like almost like a stop loss, right? Like, and that could be different for everyone. If somebody shorted Clove at $8, maybe when we get to 10, that's going to put enough pressure on them to where they're going to get out. They're going to get squeezed out of the stock and cover through the means of a stop loss. There could be people that shorted this stock all the way back at 28 and they're still holding, and they're not going to get squeezed out until we get to like 35 or 40. And that's when that's going to be their, kind of like pressure point where they need to get out. But, people who are shorting a stock and holding a long-term short position have to pay interest on the shares that they're borrowing. And they also lose money as the stock goes up. So the higher a stock goes, the more likely they are to kind of feel the pressure to get out of their position or get stop lossed out of their position, at which point they would cover, which is buying back shares, which in the same token, that's basically what a short squeeze is, right? But in a highly shorted stock, let's say as soon as one person big, short position feels that pressure and covers, that's going to drive the price up even higher. When the price goes higher, now you might have other people who are short that are going to start feeling that pressure, and they buy back and get out. Price goes higher and it just keeps going up. That's kind of what a short squeeze is. A gamma squeeze, on the other hand, is all like induced off the options chain. So when we look at, and we'll pull this up right here too, we still got the Clove, and Clove is moving right now. We're ripping. We've definitely diverted from AMC and GameStop on the day. All right, so with Clove, and this is just taking into account today's option chain or this week's option chain right here. But so you have 18,000 calls at this $9 strike versus 2,800 puts. Well, each contract represents 100 shares. And a lot of these contracts are assumed to be sold naked. That's usually how market makers do, and that's also a way for like short sellers, like bigger institutions, to get basically create a short position in a stock or make a short bet against the stock too, is to sell naked calls. So basically, this represents almost 1.8 million share differential, right? So as we get past $9, if we do, and the stock raises up past 9 and gets to like maybe $10, pretty much the algorithms that these institutions and market makers have are forcing them to buy shares to hedge their bet, right? So now they're going to end up buying shares. These 1.8 million shares are going to slowly be bought up as the price rises. Well, what does that buying pressure do? It makes the stock go up further. And as the stock goes up further and passes 10, you kind of see the same differential there. So that's another 1.8 million shares. And then and then now the algorithms are going to continue to buy to catch up to the rising price. But as the algorithms are buying, they're forcing the stock to go higher, higher. And then that's basically your gamma squeeze, right? So what you're looking at there is, when you have a very lopsided option chain, where there's way more calls than puts, once you can hit that breaking point and get the stock above it, it's almost like it doesn't even matter if retail's buying at that point. The option chain itself is going to cause, these naked short sellers algorithms to buy up shares to hedge, and that buying pressure continues to make it go up. So to me, it can happen in either order, but, I would imagine like in a case like CLOV, in order to really put pressure on short positions, and get them to feel that pressure point where they need to cover, we need to get this stock up higher, right? Like $15, $20, 25. And I could be wrong. I don't know what the actual amount is that's going to force somebody to cover. But what's going to help us get there and what's going to help us get there fast, to me, a gamma squeeze. So I would say the gamma squeeze would come first in this scenario. Other people might say there's going to be a short squeeze, then a gamma, but just pulling this up, this is that TRADYTICS app, and I already have CLOV pulled up here. Let me just refresh it. I just like the way this bar graph looks, and I'll make this bigger just so we can see it. I know you guys. So this has every strike price, and it includes the entire chain. So as you can see here at 9, just using that earlier example, 58,000 calls versus 12,000 puts. So that's a difference of 46,000. That's 4.6 million shares. Here we see a difference of 5 million shares. And then at the $11 strike, 3 million shares. At the $12 strike, 2 million shares. At the $12.50 strike, almost 2 million shares. And then, I'll just keep jumping ahead, though. At the $15 strike, 7 million shares. So to me, I think once we get in this wheelhouse here, if we're able to get to like $13, it's going to force all these calls back here to get covered. And that's going to push us past 15. And then getting past 15 is going to force these to get covered. And then that's going to push us up to maybe 18, which is going to get this big number covered and extend us to 20. And it's like that alone, the gamma squeeze alone would get us to about 43. Once we get to 43, at the end of the gamma squeeze, at that point, and maybe somewhere in between, is where, depending on who the short seller is and where they got into it and how much capital they have to back it up, that type of movement upwards of 43, where the option chain's just taken over, now you're going to have shorts that are like, getting stop lossed out and getting margin called, or maintenance called, and now they have to cover their position. And to me, that's where the short squeeze would start. And now from 43, hopefully people are starting to cover from there, and that's what would drive us upwards of into the hundreds or whatever. I mean, I have no idea how high it would go. And I just spent a long time talking, so I'm probably way behind on the chat. Sorry, guys. And also, CLOV is up to 830 right now. We're up 2% on the day. So, let's Let's see here. Josh says, why aren't they covering? These people that short get paid like hundreds of thousands, maybe millions to short this company. Maybe they know earnings is going to be bad. No, I think a lot of the people that opened up short positions on this stock originally, and this is more like smaller people, um, and I say smaller because not the big institutions, but I think some of the maybe smaller hedge funds or even like some of the bigger clients of like Hedge Eye or somebody like that, they're kind of false and giving bad information, right? Like that Hindenburg report that came out was more of like a short and distort tactic. But what they do when they put that information out there is get other like retail traders to go in and hammer the stock down too. And there's just been a lot of FUD out there. And basically they're doing it for two reasons. They're doing it because they want us to get scared and sell our shares, but they also want other retail traders or big money that doesn't pay us enough attention to come in and short the stock too, thinking it's dead and this stock's going to go bankrupt. But this stock has been getting attacked, since well before last earnings and the earnings before that, and so I don't think it has anything to do with earnings being bad. And even if earnings are great, you might see this stock get attacked even harder the day after earnings. So, I think the good point with Clove, something that to point out is we've been seeing a ton of institutional buying and not a lot of institutional selling. So, um, it's and that's to me, that's where the big money's at. That's smart money. Schwab came in. Let's see here. I think Schwab came in yesterday and bought a ton of shares on Clove. I'll pull this up. This is from Fintel, but so what are we looking at? This is all yesterday from here to here. So Schwab came in and bought 54,000 shares, 375,000 shares, 418,000 shares. So I'm sorry, those were puts from somebody else. So, but it's showing up as green. So they more than likely sold the puts, I'm assuming, which is a bullish stance. I would imagine that's what that means because it's showing up as green. And someone else came in and bought 45,000 calls. But Schwab bought a ton of stock, 400, almost 500,000 in shares. Going down a little bit further for some other big buys. Fidelity last week bought again more than 500,000 in shares. Shit, almost 1,000,000 in shares if you still look. But I guess what I'm getting at here is the big purchases, the big movement in this stock right now, like that's been coming in, it hasn't been insider selling, it hasn't been institution selling. We're seeing bigger institutions come in and purchase this stock up. So if anything, I think that they know that this company's headed in the right direction. And I'm gonna skip over a lot of these. Sorry guys, I'm trying to catch up. Lisa says I talk about reading charts, candles. Yeah, I'm gonna get into that too. I think I want to cover kind of like the terminology and everything that's been talked about lately. Like that's why I started with naked shorting and but that's something I want to get into too. Is like how to read a chart, simple day trading strategies. Just the simple indicators and I guess because I have so many trading platforms now, and if I'm making the video offline, I could even show you guys like how to pull up VWAP and do your settings in Webull, in Thinkorswim, and in Charles Schwab, and kind of like I don't know. But yeah, I mean, charts and candles and stuff is definitely something that I want to get into. I know there's a bunch of other videos out there that kind of co-creator just said that too, but I mean, at least to kind of have them all in one spot, and like, hey, these are the ones that I look at. This is what I look for. Ian says, Clark Clove, Humana's down 6%. Wonder why. Great answer, co-creator. Yeah, I don't know. Honestly, I'm not up on it. I don't follow it as much. Damn, BNGO up 6.5. I'm gonna have to see if there's some news on that. I actually got some green in my portfolio on BNGO right now. Nice. SMJ says I don't believe they can cover through dark pools. I'm trying to catch up to you guys. Sorry. Badass Dad's Cast says Max Payne is down to 8. I did see that as well. So and basically, but what I don't understand there is, and maybe we'll check somewhere else. That doesn't make as much sense to me. Just looking at these numbers, like 8 is that one. Oh yeah, that does make sense because there's so much more buying came in at 9. So what happened here is now 9 is like heavily outweighing puts. So they don't want to let it cross 9 now. You know what I mean? So now they're going to be trying to push it down to 8 this week. So where like last week and the week after, it seemed like 10 was that number where things would start to take off. So things are, to me, that's more favorable for us because now it's like well within our distance. We'll just have to see. DraftKings breaking over 50 is pretty. I don't think we've seen that. I know not everyone's in DraftKings, but that seems like that was kind of a significant number the last couple of days. It went on that run last week, Monday through Friday, with 5 days in a row, and it hasn't been able to push through that $50 mark, and it looks like it's doing it now. So, oh, Zed, that would be bad. He said there's a chance for reversal today. We go red when you close your stream. Maybe I'll have to just keep streaming then. if we get above 9 before 8 o'clock, I'll just stay on it. I don't want to jinx it. Let's see. Sorry, guys. Really trying to catch up. So yeah, Joseph, I did see, and I know I'm way behind, but I did see this morning before I jumped on that Max Payne on that MaximumPain.com was $8. Um, but thanks for the reminder because I want to check Swaggy stocks too, just to kind of see it from two different places. But it makes sense based on what I see in the option chain as well. Um, so here's Swaggy stocks. Gives us kind of the same data. Yeah, 8. And all that is, like I said, that's just way more calls pouring in at the $9 mark means that now the market makers want to keep us below 9. Dave says real institutions have the ability to break the small hedge funds. Yeah, that's the other thing too. We see positive earnings or we get confirmation in the earnings. Then you might see some other big institutions just continuing to buy, and it could be that they're just setting it up. That's the thing. Like retail, we get impatient, right? We want action now. We want to see our short squeeze tomorrow. But these big hedge funds and institutions, these bigger players, they could be patient. They could wait, and it could be, and that's why, in my opinion, you see this option chain continue to get loaded up, all the way down. I mean, it's loaded for months. And if I was playing the long game on this, and I just wanted to kind of slowly keep loading it up, I'd wait for the IV to drop, buy some more, buy some August calls, buy some. And I'm not telling anyone. I'm saying if I was like, had billions of dollars to play around with, load up the November chain, load up the January chain, and just keep loading it up. And then at some point, when you get your position all settled in with your option calls and you know that you got these shorts way in over their head, now you come in and pounce and start throwing your money around. And then that triggers off a gamma, a short, everything, and just makes the price explode. Um, that could be, there could be some whales out here planning that too. I sure as hell hope so. Let's see. Jared Aloha, what's up? So it says shorting is necessary and a good thing. It creates buying opportunities for bulls. It's yin and yang, needs shorting and sell off for things to go back up again. Nothing goes up forever. No, I agree with you 100%. I don't think that like shorting in general is bad. I think that, manipulation is bad. And I kind of talked about that yesterday in that selling versus shorts or short selling versus naked shorting video. It's like, shorting is legal. It's perfectly fine to short a stock. But if you can't obtain shares to borrow and you're naked shorting a stock now, and then you're creating these failure to delivers and you're hammering the stock more than what's legally allowable, that's when we run into a problem, right? I mean, I'm all for like a free market where people have the opportunity to bet against a stock. I mean, shit, I've shorted stocks before, especially in day trades. Ride something up and then come back in and ride it back down. I mean, essentially buying a put is a way of betting against a stock too. Even though like shorting would apply a little bit more pressure to it if you're getting, downward sale momentum. But yeah, I absolutely agree with you. There's nothing wrong with shorting a stock. It's just when it gets abused. Um, there you go. Good. Right on. Hard not to smile when my entire portfolio is rising. Yeah. I mean, I'm kind of in that same boat right now. What's not doing good for me? My AMC calls that I bought. Yeah, I've been pretty lucky with AMC though. I've picked and choose my times that I get in, and it hasn't been very often. There's been times where I've bought puts on AMC too, but I've been pretty damn lucky or spot on with AMC on pick and choosing what days I want to jump in and what days I'm jumping out, what days to ride it on the way down, and doesn't seem like that's the case right now. But I still have, I think, 2 more weeks on these calls. Yeah, 2 more weeks. So I jumped into, I think it was last Thursday. I bought some AMC calls just to kind of get on the next ride up. Um, all right, let's see here. Target short seller says, look at the option chain for August 20th. Yeah, I mean, we're really starting to see, and to me, like with the float the size of cloves, if you're just joining or getting in here, you not in the past, but for me, anything over a 10,000 differential gives us that potential for a short squeeze, and we have it at 9, we have it at 10, we have it at not so much at 11, 1250 definitely, 14, 15. 16. So yeah, I mean it's definitely building up, and I mean 20. But this all takes into account now too, though. That's why I keep pulling up. I like that TRADYTICS chart, and I keep pulling it up because that is including. So like, what I mean by that is like, look at the delta right now on these. So at the money delta, the $8 strike is 0.59. So if all of a sudden we were to get up to like, let's say $10, that means this $10 strike would likely go up to about 0.59. This $9 strike would go up to 0.675. And this is the August 20th chain. But if it happened today, these options would absolutely still contribute to, the potential gamma squeeze that we have for the July 30th chain. They all work. They all contribute. And that's why it's so, amazing, like how loaded this chain is. Like we could literally hit a gamma squeeze any week, because we're not dependent right now on this July 30th chain. I mean, if it doesn't happen this week, all these other chains are loaded up too, and it just and they continue to be loaded up, which is insane, and it kind of baffles me that it's like every week we've had this opportunity now. Co-creator, let me read this one so I'll see if I understand it. Can you explain how order flow that's controlled by brokers influence how shares we buy or sell are controlled by the apps we use? I'm gonna take a screenshot of that too, just so that I could dig into that a lot more, because that's a really loaded question. Um, but I'll sure as hell try right now. So, order flow controlled by brokers. So I think what you're saying is this. So, like for instance, going back to, like, let's say Robinhood back in January or something. Um, when you and I hope I'm explaining this right or answering the right question, but when you press buy on to buy a stock in your brokerage app, typically what happens is they're not even gonna they might not even route that to an exchange right away if they have shares in there, like maybe if they could handle it internally, like they already know they have sale orders coming through, but most of the time it'll get routed to the exchange, right? And it'll go to a market maker who is handling the order flow for that particular person. So if it's like, I think like with Robinhood, Citadel, I think I remember hearing handled like 70% of Robinhood's orders. So now your order would go to um, Citadel, right? Robinhood will put those shares in your app like almost immediately, but the shares will go into the Citadel thing, and then they'll route it through a specific exchange. They could route it through a dark pool. They could route it through like different. There's different exchanges they could put it through to fill that order, and then they'll try to match you up with a seller that's coming through another order flow on the other end that's coming from a different brokerage app. And that's how they pick what exchange they're going to send it through. It's like, how are they going to connect the dots? So you're over here on Robinhood, there's a buyer on Fidelity, and they're both coming in, but now they're going to route those orders through an exchange to match you guys up. That's my understanding of it. I don't know if I necessarily answered your question per se. Controlled by brokers influence how the shares we buy or sell, and controlled by the apps we use. Yeah, it depends on your brokerage too. Like I know, like with Schwab, for instance, I have the ability when I go in and buy, like right now, if I wanted to go in and buy some stock, let's see, if I click on stock ETF, I could pick what venue I want. Let's go smart venue. And I think I can also control exactly where I route it through. So if I'm buying stock and I want to buy 100 shares, I could say, I want this particular order to go through, this exchange, which can also help. And then it doesn't just get routed by the by your brokerage app or by the market maker that it gets sent to. Leo, good morning. Do you agree that there is really nothing we can do as retail investors to change the manipulation that's happening? All we can do is use that knowledge of manipulation to our advantage. Yeah, to a certain extent. I mean, I think, and this is really like, I mean, how much when you talk about, retail, if you have 1,000 shares, someone else has 5,000 shares, this person has 6,000 shares, even if someone else has 50,000 shares. Yeah, I mean, if we all buy and hold, um, we're supporting the cause to a certain extent, but really, what's going to get us to move over $9 today to get us above that max paying price? I don't necessarily think it's retail. I mean, yeah, we help, but to a certain degree, it's like we need a big whale to come in. And there could be some big whales in retail, absolutely. But I don't think that, you know, me, you, or anybody else that maybe is just going in here and throwing around a couple $1,000s or $10,000 or $20,000, we're not able to have as big of an effect on the price movement of a stock as a major player, an institution, an opposing hedge fund. Really, I feel like they move the stock, they provide the movement, and we're just along for the ride. And I think that's kind of what you're getting at too. Like all we can do is use that knowledge of manipulation to our advantage. Yeah. So like, us as retail, we see that a stock is oversold. We can come in now and identify that and see what's going on and say, well, shit, this stock is oversold. This stock is heavily manipulated. This stock is overshorted. And this is a great value play. We can come in here and get in on this cheap at $8. Speaking about Clover right now, and I know this stock is going to go up. Now, I will say this though, like Wall Street Bets, with 8 million members or whatever it may be, when something becomes popular on there, you have that type of retail momentum coming in and flowing into something all at once in one day, for like a pump and dump type thing, that can break you over that $9 mark. Then you don't need a whale to get you past the max pain part, or a hedge fund or an institution to push us up. That's when retail can really do some damage. But for the most part, I think it's institutions and bigger whales, bigger players that are pushing these stocks into these zones, and we're just along for the ride. But like you're saying, we can identify these great investment opportunities. We can identify these different areas where we can get in and get out, and roll with the money, find the flow. Sorry, I'm trying to catch up again. Jared, that's a great point too. Says I believe Clover is going to need a bit of news to spark a gamma short squeeze. Not sure if it can happen purely off technical action. Yeah. Well, I mean, on one hand, like this could bring in some buying too. Like if all of a sudden we get this we cross over on the MACD, start to like trending upwards, technical type stuff, you might get more money piling in. And again, though, that's only support. Kind of like I was just saying, we're still going to need some big money. But I do feel like there's big money out there that's on the other side of this trade. I mean, this, and I keep saying this, but yeah, retail is a part of it. But when you look at just the pure number of uh why does my computer do that every day? When you look at like the pure number of calls that are open, like open interest, this isn't normal. I mean, 82,000 calls at the $10 strike, 58,000 calls, 73,000 calls. Like that's big money in here playing with us too. And so, someone went in today and bought, what is this? The $4 strike, 100 contracts. I mean, there's been so much options volume, and the big boys, as much as like retail will go in and buy up contracts too. I don't know very many retail people that are going in and dropping like 100 contracts, 1,000 contracts at a time. So, it could be any moment, even without a catalyst, that some big money comes in and pushes it. It's just I think whenever they're kind of ready to strike too, or ready to attack, because obviously if someone could do it today, they probably would, but at the same time, you get, it's just opposing forces. You got bulls and bears, and they're both fighting against each other. Earnings expectations could absolutely do it. Pre-earnings run up, and then yeah, like you said, definitely there's other catalysts that could be out there too, right? I mean, but then again, like, okay, so Clover Health, what was it, 2 months ago now, announces that they're doubling their geographic footprint. And great news. You would think that like that in itself would be a catalyst. And all of a sudden we don't see that upward momentum. The stock gets attacked harder. So, but who knows? The next announcement they make, where they are increasing their geographic footprint by only 10%, could be the one that sets it off. But any sort of like excuse, I guess, for a big institution to come in and jump into the stock and get this thing moving, I think would definitely be positive. Just looking around, BNGO almost up 5%. It is but back up above 6 and trading above VWAP. AVXL moving too. Oh, that reminds me. I wanted to check if there was news on BNGO. That seems like a lot of movement there. No, nothing that I'm seeing. I know I talked about this yesterday morning, but it looks like we're bouncing off this 200-day moving average, and hopefully we can get this break above right here, and almost ready to cross back over on the MACD. RSI curling up. If anyone's been watching me, I've been for a while now waiting for this breakout, for the run to 15. And shit, the more I'm looking at this right now too, looks like we have a nice little flag forming. Yeah, I don't know. I haven't really been paying too much attention to BNGO. It's just been on the back burner right now, but I do have a position in it. My CLOV shares in my Fidelity IRA are from the Citadel Exchange. Am I inadvertently contributing to short sellers? No, not necessarily. I mean, I don't think you could really control it, right? Um, you know, it's hard to say. I don't really know the answer to that one. I mean, they handle 70% of retail transactions, so you go in and buy them, and it's gonna get routed through somewhere, and it got routed there. The transaction already happened at that point too, right? So now those shares are just parked with you. So when you go to sell them, they might get sold on a different exchange. It doesn't mean that they're being held on that exchange, right? Once they've cleared and they're sitting in your IRA, they're sitting with Fidelity. So, yeah, I don't think it's anything to worry about. But yes, Michael makes a good point. You can call your broker and tell them not to loan your shares out for sure. So Jared, I don't know how true that is. And someone just asked me that on a YouTube video too. To like discuss on one of those Chalk Talk videos, and I probably will, but I remember hearing a lot about that, like in the earlier days of like GameStop, like, oh, set a high sell order. If you set your sell order at 420.69, then no one, your broker can't lend it out and all that kind of stuff. But I think that was just a rumor. I don't know that there's any truth to that at all. I think if you're in a cash account, your broker can't lend them out at all. If you're in a margin account, it depends on who your broker is, but you can request from your broker that you don't want them lent out, in either scenario, cash or margin. But I think if you are trading on margin, you have no control over it. Let's see. Mac, yeah, my question is who keeps loading up the option chain? Yeah, I get it. I feel the same way. Like, it's obviously not retail putting that much into it. Like, don't get me wrong, there is retail, and if you start to total up everybody, like I have, what do I have right now? I've got some $15 calls expiring this Friday, that I bought about 3 weeks ago, for cheap then, and they're worthless now. But I mean, I have like 20 of them. So even if there was, I don't know, 1,000 people like me, maybe that makes 20,000. That could be the case. I don't know. But some of these buy orders that come in, you see like these call sweeps, and that tells me that that's not really what's going on. Like when you see a call sweep come in, and someone comes in and swoops up like 900 contracts, um, you know, I would imagine that there is some big players kind of behind the movement too, and a lot of times it's used as a way to leverage money, right? So, and what I mean by that is, even if I am a big player and I got like millions of dollars to throw into this stock, if I wanted to create some upward movement right now, I can go look at, like, let's say the delta here at this $8 strike, right? Got a 0.57 delta. So how do I put this? If I have $3,000 that I want to put in to this stock, $3,000 times what we're trading at right now, $8 would get me 3,000 divided by 8. I could buy 375 shares. That's not going to move the price a lot, right? But at $31 a contract, at $3,000, I could buy 96 contracts. 96 times 57 shares, which is the delta right now, is 5,472 buying pressure, 5,472 shares that would be purchased immediately by a naked call seller the moment that I buy those, 975 contracts. So you could, a lot of times too, I imagine that some bigger players that are, fighting on the long side, whales, and that was just an example of what, spending $3,000. So, if I have $100,000 of dry powder that I wanted to put into this fight today, I would probably do it using the option chain. If that's like chump change to me anyways, right? Like I already have my long position set. I already have some long-term calls, and I just want to come in and try to really manipulate this price upwards. Then I would kind of do it with the option chain and do it through the use of hitting those certain numbers on the option chain where you can drop $37 in and get essentially 57 shares worth of movement, and they'll use that to kind of like fight and out leverage and make their money last longer, knowing that some of it might be thrown away, but in the bigger picture they might have 5-6 million, 7 million, 10 million worth of CLOV shares sitting on the sitting in the game already. So that's my take, at least. That's my speculation on it. And then the short switching along, like Al mentioned. I mean, I know I've brought this up, multiple times too. It's like if I was a short hedge fund and I knew I was getting screwed, and I kind of saw that, like, oh shit, I believe this Hindenburg report, or I believe this, I believe that. Now you see that this company isn't going bankrupt and it's actually on its way back up. Hell yeah. I mean, and that's in their name, right? A hedge fund. They want to hedge their bets. Hedging means you're more than likely gonna, take both sides to minimize your risk. So if I'm already over leveraged in a short position on a stock, why wouldn't I slowly start accumulating calls on the other side, to the point to where eventually when I do cover, I'm not gonna lose. I'm gonna make money on the calls and lose money on the short position. I mean, to me, that makes the most sense, and that's in their nature. That's why they're called hedge funds. Um, do you think the initial retail investment through a SPAC and not IPO will cause this to run up sooner than an IPO? I'm not sure if I understand the question correctly. Yeah, co-creator. That's a good point too. I mean, if you have 1,000 shares, a couple thousand shares or something, um, you know, our shares being loaned out or not loaned out doesn't make a huge difference. But now, if you really like think about it this way, right? There's 40,000 members of the CLOV subreddit. Doesn't seem like everybody participates in there, but let's just say 40,000 shares. I know, but especially with Clove's price, it's probably, I don't even know what the estimate would be. Let's just say everyone owns 1,000, because I know some people own less and some people own 10,000. So times 1,000, I mean, that's 40 million shares. So if everybody, regardless of how big or how small, went in and requested not to loan them out through all their brokers, and they were able to successfully, even if only half of the people were able to successfully do that, now that's 20 million shares we'd take off the market. I mean, it seems like a fractional amount for, but if everybody did their part, absolutely that would take shares out of contention, like shares that can't be lent out now. Um, I'm way behind again. Every negative article on Clove talks about how they are losing money each quarter. Any idea when they will stop losing money? I want to say we talked about this in the roundtable on Sunday night. I think that's, I always get confused because sometimes I'm watching Tar Heel's show and he's got a guest on, or sometimes I'm on a stream or I'm on the show, or and it's like I forget where we talked about this, but basically, um, I mean, they're in the early phases of this, and as they continue to expand their base and grow, I think that that's going to help. Also, there's a difference between the DC model that they're moving into now, which has unlimited upside for what they can make off each managed life, compared to the Medicare Advantage ones that they're in right now. And those plans are capped on how much they can make. So the company is moving into the DC. They already started, and I think they've experienced, I think, the most growth of any companies that moved into this DC model. But then on top of that, we also talked about, the star rating, and once that star rating goes up, that's an additional like $500 a month per managed life that would bring in more money too. So there's absolutely all these different opportunities for them to become profitable. They do have enough cash on hand right now, if everything was to go exactly as is, with no growth and no difference in star rating or anything like that, to last, I think, maybe like another year and a half, 2 years. I could be wrong on those numbers. But so they've got cash on hand to make it work. And it's more of one, expanding the DC model. That's one way that they could, stop losing money. Two, once they get the increased star rating, and if you look at the positive articles that have come out about Clove in the recent months, it's all about basically them being acknowledged as, this healthcare provider that's doing more and going above and beyond. So I would say that 4-star rating is right around the corner too. And that's going to be the big one, because $500 more per month per managed lives is a lot of money when you start to think about, managing 200,000 lives by the end of the year. But no, they are losing revenue every quarter, but that was part of the business model, right? That's why they have the cash on hand. I think one of the important things to me is that the company um, isn't looking to get more cash. They didn't, that, like, they just did this whole warrant thing and they went cashless. They weren't trying to raise money. So to me, that's bullish. That means that they're absolutely intending on either getting this 4-star rating, expanding their DC model. Like, they know that they're going to be profitable moving forward. They don't strike me as someone who's cash hungry and needs cash to survive right now. Um, Caesar says profitability in 2022 or 2023. Yeah, I mean, that's right around the corner too. And so, I mean, shit, we're looking at what month are we in right now? I'm tired right now. 5 more months, we're in 2022. I mean, I'm not saying it's going to happen in early January, but that kind of puts us right in that time frame, right? Like, they're trending in the right direction. that we seen them getting acknowledged and getting invited to events and being, showcased as this top healthcare, thing. And it's like they're getting there, and that's all going to help towards getting the star rating. But then, the move into the DC model, which doesn't have that limited profitability, and just I don't know. I mean, I think it's all trending in the right direction, and who knows, maybe we'll get something coming in, like on this earnings call, some sort of announcement of growth, expansion, anything of that nature. But anything like that is going to really change the stock and probably get serve as a huge catalyst. Co-creator, sorry, I know you just put that up twice too. I've been so on the 4 hour to 1 year candle view, we are in stable RSI numbers, but when you zoom into 2 hour to 1 minute candles, the more the RSI is oversold. Why? Okay, so because it's basically it's based on a time frame, right? So, and I'll go here just so we could look a little bit different. But so on the daily, the RSI right now is what, trading at 42. I think this is what you're saying. On a 1 hour, RSI is high. 30-minute RSI actually went into oversold. I think that's what you're saying. Like, why are these numbers different in every time frame? So, just same reason why the MACD is and why everything else. So once you change up your time frame, it's basing the information off of those intervals, right? So if we were talking about, trading 1 minute at a time, well, for the last, what are we looking at? Since 701, this stock has trended. Oh, I'm looking at BNGO right now too, but same thing applies. So here we go, CLOV. If we look at the 1 minute, basically since almost 7, we're at 7:30 right now. So for the last half hour, we've been trending downwards. So from 8:30 down to right below 8. And that's why we see this RSI going down. But if you look at, let's say, a 1 hour, here, I'll turn off extended too. Get this damn VWAP out of the way. We've been trending upwards, right? So on a 1 hour time interval, RSI is trending upwards. I mean, it does follow the stock as well. On a daily, we're still heading down. I mean, we're still like in a downward trend, and that's why we see the RSI down. I hope that that kind of summarizes it. But basically, all of these technical indicators, like if you pull up, moving averages, and you're looking at moving averages, you know, you're looking at moving averages on different time frames, those numbers are all going to be skewed because they're based off those time intervals and what the stock is doing off those in those specific time frames. Tar Heel asked a good question: is the options chain being used for hedging? I think so. I think it is. I mean, there's so many complex strategies in the options chain too. Like buying calls and buying puts is just like the very, very, very tip of the iceberg, if not even. But yeah, I mean, kind of like I said, I think that you can absolutely. I've done that before too, where I've hedged my own bet. Like if I'm holding a stock that I want to hold long term, and I see something in the short term that maybe looks like it's going to drop. You could buy puts as a way to hedge your own position. Buy puts. Let's just say, I'm not saying buy puts on CLOV. Let's use a different stock as an example. Let's say I got DraftKings. Okay. And I want to hold, and this is just absolutely hypothetical here, but let's say I bought DraftKings, way down here at 34, and in the long run, I think that DraftKings is going to be a $500 stock, and I'm willing to hold this stock for the next, who knows, 10 years, whatever, right? This is long-term stock. I never want to sell it. Okay. Well, as it continues to go up, and let's say I'm watching all this stuff and we get way up here to 75, and I'm just like, you know what? I feel like we're due for a drop, or I see this MACD crossover, and maybe some news comes out or something where, I feel like a short report, whatever it is. Well, I don't really want to sell, and I own 1,000 shares, I can go in there and maybe buy 10 puts for a very fractional price. Like, at this point, my 10,000 shares are, um, or my 1,000 shares are worth $74,000, right? So I could probably at the very same time, to protect my $74,000 investment, go in and spend, I don't know, $1,000, 1,500 on puts and hedge my bet. That's effectively what hedging is, right? So now if the stock goes up, shit, who cares about that $1,500 that I bought on puts? That was like to protect my investment. But if the stock goes down, I still hold my shares, and I'm making the same amount of money on the puts. I'll probably still be up 74,000, and then still be able to sit here with my 1,000 shares and continue on the next run. Um, so that being said, yeah, absolutely. I mean, if I had a huge short position in Clove and I felt like I was in underwater, and in over my head, even if I didn't feel that way, I would probably likely buy calls or puts. I mean, shit. Look at the institutional ownership on Clove, just to take a look at that. Um, and what some of these like. Here's Equitech. This is back on July 20th. They came in and bought 16,000 shares, right? Now, at the very same time, so that this is more of a long position. They bought 16,000 shares and 12,000 calls. To me, this company absolutely thinks that we're going up. Um, but they also, at the same time, bought 14,000 puts. And what that is them hedging their investment. And I think you're going to see the same. And if you go through these filings, you'll see the same exact thing with a lot of companies buying calls, shares, and puts. Typically, if someone's opening a short position on a stock, um, you'll probably see some offsetting calls as well. Can the smaller time frame candles and indicators be used as a way to foretell the direction of these indexes in the wider view, and can that help us know when the squeeze will happen? Not really. So, I think when you want to look at, like, this is just me, and I know everyone uses technical indicators a little bit different, but for me, um, you know, if you're into swing trading and you're looking like what's going to happen in a stock in the coming days, weeks, months, then you should be looking at days, weeks, months, candles, and indicators. That's going to show more the bigger movement. Now, one thing that I know you could probably get into when you want to look into long-term moves is maybe like a 4-hour chart can kind of tip you off to, give you a little bit more, and maybe 4-hour can be a little bit more telling into what to expect in the coming days sometimes. But if you look even at a 4-hour chart, just looking at the MACD, green, red, green, red, green, red, and it's like kind of like all over the place, right? Um, because that's based more on like intraday levels. But so I mean, to me, if you want to consider what's going to happen in the coming days, you should be looking at day candles. Um, Now, for like day trading, when you want to talk about getting in and out of a stock within like a 5 minute, 10 minute time frame, maybe holding something for no longer than 10 to 20 minutes, or a half hour, then you want to get into the little mini time intervals like 1 minutes and things like that, and start. Those are the wrong moving averages to have up for day trading, but that's when you would want to look at that. So it all depends on how long you want to be into a stock. If you want to see where a stock's going to go in the next half hour, maybe look at a 1 minute and a 5 minute candle. If you want to see where a stock is going to go in the next day, um, maybe use some like 5 minute and hourlies. If you want to see where it's going to go in the next week, maybe you can kind of use the 4 hour to kind of give you hints about it. But if you're talking about being into something for days at a time, weeks at a time, like a swing trade type thing, to me the daily chart's the best way to go. Um, Tar Heel says they buy long, then loan shares or repo to make cost to borrow money, then use that money to hedge with options. Free way to hedge. Yeah. I mean, there's so many strategies, and we even I think we talked about that on this stream yesterday too. Like, why would big institutions loan out their shares to short sellers? I mean, shit, they also get to make money off these shares while they're sitting there. It's kind of like selling covered calls, but without the limited upside, right? So if I'm a huge institution and I own millions of shares of this stock, it's like I believe in the company long term. I'm not selling this stock until we hit triple digits. But yeah, you wanna pay me to borrow my shares for the next 6 months to a year? Go for it. You know, you're not going to drive the stock down, and that could be why too. They don't care about the day to day actions, and it's just a way for them to make money off it. Um, you know, and collect premiums and that sort of thing. All right. I just want to take a look around real quick. So yeah, GameStop got hit pretty hard this morning, down 6%. Let's check on AMC, down 3%. And Clove, we just got negative after getting this nice little run up earlier. Went down and touched 797. Battling for 8 again, which is that max paying number. And DraftKings, after hitting a high of 50.69, got pulled back below, which tells me what's going on. Is the market? No. Well, this is kind of a fat candle that would cause some downward pressure. Just looking around, BNGO up 4%, trading at 601, but below VWAP. AVXL up 2%, trading at 2113, also below VWAP right now. AMC just broke above VWAP. The SPY is continuing to fall. BlackBerry's having a good day, up 8%. Wow. Trading at 1073. Space trading flat on the day. Is that it? Oh, I got Wish up here. We must have been talking about that earlier, up 3%. All right. And SPRT up 9 at 760. I know it started the day way up higher than that, though, I think, right? All right, so how's the line drawing practice? What do you want me to draw? I'll draw some lines. I actually I don't know. I did that video on DraftKings the other day, and I started playing around with my pencil in here and getting it. So I mean, if there's something you want me to draw, I'll absolutely. What do you want me to look at? Can you tell us why this shorting can't continue forever? Well, technically it could. In a broader aspect, not on Clove, but just in the broad sense of it, right? Like, what does a short seller want, especially one who's using illegal manipulation tactics? They want to drive this stock to zero, and then they don't necessarily have to cover after that, right? But that's not going to happen. They'd like to see the companies go bankrupt. But in this sort of case, like with a company like Clove, and again, that's why kind of like what you got to earlier, co-creator, was like for us as retail, it's up to us to kind of digest the information that's thrown at us and pick winners or what we think are winners and ride the coattails of the other big firms and institutions. That's what I think. And so when you look at this, because this is such a strong company and such a huge growth company, it absolutely can't continue forever because this company is going to continue to organically go up, which is going to make it harder for short sellers too, right? Like at some point, they're going to run out of legitimate shares to borrow because you can only short so much, and once those shares dry up and they run out of those, cost to borrow on those shares is going to go up because utilization is going to be through the roof. And that's when the people lending the shares out can start charging more. Like, you know what? We still have people that want to short this stock and there's no more shares available. So instead of charging you 2%, we're raising your interest up to 50%. Now they got to make a decision. Is it profitable for them to sit in this short position where they're hammering this shit every day and they can't get it below 8 anymore? Um, and so now it starts costing them money to do it. And it becomes that breaking point, right? Where almost the price action going upwards may not cause them to cover, but the cost to borrow will cause them to cover. So that's one way of looking at it. Then on the other end, it's like, okay, so if they run out of shares available, or even if they don't even want to mess around and report how big their position is, or you know, pay the cost to borrow fees. If cost to borrow gets expensive, they could start naked short selling. Which I would assume absolutely happens in a stock that's as heavily manipulated as ours. So, what causes them to cover or, to prevent the shorting to continue? What's supposed to happen is when they naked short sell, they're going to get caught with those failure to delivers at the end of the day, right? When all of a sudden they just sold a bunch of stocks into the market and they don't have the shares to deliver to the clearinghouse at the end of the day. If you're selling shares into the market, that means that you either own them or you borrowed them from somebody else. So when they don't have those shares at the end of the day, they end up creating failure to deliver positions. And now it's like, okay, well, for whatever dumbass reason, they're given 21 days to now come up with this failure to deliver. So that puts it off a little bit longer. Eventually they can only, I think, like with all the can kicking and moving it down and pushing it off, all they're doing is like coiling the spring tighter, right? So, and if it looks like the new springboard is set at $8 and we take off from here, well, that'll be higher than when we took off from 6. But, yeah, they can't do it forever. They could do it forever in a shit stock that is going to run to zero. But we have a community behind us of retail, and this is where retail does provide support. Kind of like that example I gave earlier, like 40,000 strong in the CLOV subreddit, somewhere around there. And if everybody on average owned 1,000 shares, which I know some people own a lot more than that, but I'm trying to be conservative, and I also know some people own less than that. But that would be like 40 million shares right there. And that's a significant portion of the float. So, even if that's all we own as retail and that's all we contribute to this, we're buying and holding, and we're kind of, we're doing our part too. And that's 40 million shares that are not going to be able to be legitimately lent out. And that type of shit is what prevents it from going down below 8. Whereas, because who knows, maybe we own 60 million, maybe we own 80 million shares, but the more that we own as retail and just hold, kind of holds the line on this shorting, right? As long as we're not letting them loose when we get these big short attacks. Sorry, Zed, I was reading your thing. IDEX. You know what? I want to say that sounds hella familiar. I gotta hit up my boy Colin. He's the one that was supposed to come on here. Colin, if you're listening, he was supposed to come on here months ago to talk to us about AVXL. But I want to say me and him played IDEX last year. I think. I want to say we did something with IDEX last year. I don't remember though. That sounds really familiar. Sudeep says Clove is trading in a clove leaf pattern these days. Yeah. Let's see. My girlfriend is telling me not to buy more stock. Can you please explain to her why buying a dip is a good thing? So, if you believe in the stock, right? And you believe it's gonna go up, as I do, like let's say with Clove, and I'll bring up Clove as an example and just the idea behind it. But let's say you bought into Clove at, we're still on a minute chart. Let's say you got into Clove 1,000 shares at $13, and Clove drops down to 8 now. Well, you're down what, $5,000 right there. And while that may seem like a lot, and that is a lot, Now you need to get back to 13 to get your 5,000 back, and you need to get to 18 to make 5,000, right? We'll just try to use like simple numbers. So, but at $8, if you were to go in right now and buy the dip, buy another 1,000 shares, the difference there is $5. So that's gonna decrease your cost to what, 1050. So now you're gonna be in for 2,000 shares with a cost average of 1050. Well, now to make back that $5,000 loss that you had, let's see if I could think this morning. So now I would need the share price to get to 1050. It only needs to go up 250, and now I'll be at break even. And now if we get to 13, I'll actually be up $5,000. So as you continue to average down, I guess buying the dip, you continue to average down. It makes it that so that smaller movements in price will allow you to make more money on the way up, and also to get back to even if you're already below. Um, Very dangerous practice if you're just doing it with some shit stock that you don't know anything about, and um, you're just averaging down to average down. I think, in the grand scheme of things, as a trading strategy, if you're in a trade and it goes against you, it's better to, like, have a stop loss and get out. This is in the grand scheme of things as in a regular day trading, swing trading strategy. CLOV's a different situation. GameStop, I would say, different situation. These are more like long-term holds, heavily manipulated stocks that are gonna pop at some point. It's just a matter of when. And so the more shares you can accumulate and the cheaper your cost is on those shares, shit, good news to me. So I mean, I would say buying the dip, I'd love to talk to Wall Street Degenerate at some point, because I know that's his name, is buy the effing dip. Uh, and I absolutely agree on a stock like Clover or GameStop or something like that, like any sort of long term play you have conviction in. Absolutely buy the dip. Um, but that's not always the best strategy if you're just day trading some shit stock that you don't know anything about. So, just as long as you know the difference between the two. Um, just got into the Russell 2000, and the big dogs is buying for the last few weeks. All right, Zed, I already wrote that one down, and I circled it twice now too. So I'm gonna look into that one, because it sounds so damn familiar too. I feel like I was in a trade on that at some point, and I just usually I'm pretty good about remembering tickers and what I got in and out of something for and all that kind of stuff. And as I'm talking, all we had to do was start talking about GameStop, and we're finally getting above VWAP. Um, that is the red in my portfolio today: GameStop and AMC. Yeah, so if I can get those to head in the right direction, maybe I'll have all green across the board. That would be amazing. Um, all right. So it is about almost 8 o'clock. Let me try to catch up on the chat real quick. Every time you put my questions on the screen, it looks like I'm in the corner DJing because of my profile pic. Absolutely. That's what is that? Oh, LL Cool J. What's my DJ's name? That's what I think about every time I see you up there. Uh I know LL Cool J was cut creator, but your co-creator just sounds so familiar. So, yeah, every time I see the picture too, that's what I think about is I think it was LL Cool J. Wait, you mean you're not DJing on the picture? I just saw what Fluffer said. I actually thought you were DJing. You're not? Looks like I'm in the corner DJing because, oh, you just mean like you're DJing the stream. Yeah. Hit that like button too, everybody. Thank you. Um I am DJing in the picture, not on the channel. I'm a professional DJ. Check out my channel. Absolutely. Let me check out. Hold up. I want to check out Co-Creator's channel now because I haven't looked in hell long. And I know Co-Creator said the other day he might start doing some streams or some shows too. So, uh, Co-Creator, could you leave a throw a link to your channel in the chat? that's the other thing that I think is awesome right now too, is that and even though it doesn't have to do with stocks, like I know SRT, I don't know if you're in here today, but shit, he's got a ton of followers on his channel, and I know there's some other people that have been in here before too. That's like, I want your advice on how to get this thing growing. Now I'm over here trying to pull up co-creator's channel right now. I'll wait. All right. Yeah, you're not catching the falling knife. You're buying the bottom. I think that was for that comment was for, what was it? L to the O. Yeah. Co-creator says started spinning, mixing, scratching on vinyl records in '94. Bad Boy Bill, Chemical Brothers, and many others. All right, co-creator, I'm absolutely coming to Colorado at some point now. It's funny because I was eating dinner with my wife yesterday, and I was talking to her about that too. I was like, you know what, we got to go to dinner. We got to go to Colorado. I've never been, and like I said, I'd like to do it during football season and go catch like some Pac-12 games out there too. So, um, said, not just that you're DJing, you're fiddling with the level too. You're over there moving it around. Let's see here. So CLOV busting through VWAP right now too. I'm just okay. SRTs is in the house. Oh yeah, I've seen that. The J co-creator start. Yep, I have looked at it. I'm gonna check that out too after we get off. And all right, guys, I'm getting lost in the chat now. So let me look around before I get off today. So it does look like Clove is moving up. We're at 813. Another green day for Coach B on the. I think we finished green yesterday too, right? By the time I got off, hopefully we'll keep the streak alive. And this is the right time to buy, right? If you buy before I get off, the stock always rips after I turn the stream off. So maybe we'll continue that trend as well. Just looking around though, so GameStop trading right above VWAP, right around there. It seems like most stuff is in the green though today. I mean, GameStop's down 6%. I think AMC was down last time I checked, down 3%, but everything else on my watch list are green right now. BNGO trading right at VWAP at 603. AVXL trading above it at 2134. What else do we got here? DraftKings up another buck. What else do we got? Wish, for those of you guys making money on Wish right now, it's at 966, up 3.65% on the day. ATOS is another red one that I've been keeping my eye on and I did see some call sweeps in ATOS the other day too. So I'm going to be investigating that a little bit and seeing if and when we have another potential gamma squeeze coming in on that. Space is kind of trading flat right around $30. Oh, you know which one I wanted to check out was CCIV. And I don't want no one to get mad at me. CID before I leave. I don't want anyone to get mad. But I actually had told some of my buddies the other day, like after the IPO change, like, man, I think it's a good time to buy puts on Lucid. And I didn't do it, but they did. A couple of them did, and it actually I think worked out pretty good. Like puts at around 27, and right now it's at 25. And I think it's going to go down to maybe like 20. Probably down to like 20-ish before bouncing back. So I was just saying, maybe throw a little bit in there, try to make some money before it goes down. But the other big one that actually we haven't even talked about today, and I had it now that I'm looking at my notes, was, sorry, I lost the chat again. Yeah, Levi, the market heard I was signing off and decided to go green. All right, real quick, the other one that's out today, and I don't know how to play this, and I think this is going to be pretty risky to play, but I think Robinhood is IPOing today. Maybe I'm wrong. Maybe it's a different day. But for me, I'm staying as far away from it as I can. My assumption would be that Robinhood is probably going to get hammered hard, but I think that also goes into the whole thing that we've been talking about, like how much effect can retail actually have on a stock, right? So um, it could also be one of those things where retail gets crapped on. Come Robinhood IPOs, and everybody jumps in with short positions, and institutions drive the price higher, and now we all get stop lossed out or something like that. I mean, I would say there we go. I'm gonna put co-creator up while I'm talking, um, so he can mess around with the he could DJ our level 2. So yeah, I mean, I'm staying away from Robinhood. The most I would maybe do is like most IPOs when they happen. You'll see this spike early on as institutions and kind of insiders are able to get in earlier before us, which is likely what's happening right now. If today is actually the IPO date, and you'll see the stock go up hella high, and then maybe if you could try to time the top and grab a couple puts, then that might be a smart play. But other than that, I wouldn't buy short. I wouldn't do shit with that stock. Um, I wouldn't even give it any attention. But I did want to bring it up because I don't know how many people. Someone had hit me up on Twitter earlier before the stream even happened and asked me my opinion on it. And then I had wrote down that I wanted to give that opinion on here too, because I just think there's so much room to kind of like get burned on that. And that goes for most IPOs. Um, it's always hard for retail to make money off IPOs, but if anything, you look at any IPO and how they play out. There was one recently, Coin, I think, was one that, retail got burned pretty hard. But even with Roblox, actually, Roblox seemed to be maybe a good one where you got in early and I know there was people that maybe bought up here at 74 that were feeling shitty at 60, but it's starting to take off. But typically what happens, like Coin is one that comes to mind. Look at this. Gets pumped up by mainstream media. If you're retail, you got an opportunity to get in here. This is where it opened the day at, was 382. Okay, so and then it rose up and people were buying the top up here at 400, and I mean now it's trading at 220. And yeah, Jim Cramer and everybody else, on CNBC was talking about a coin was going to be this great buy, and it ends up just being creating bag holders for retail. So, I mean, but and my fear is with Robinhood is kind of the exact opposite, right? If retail hates them so much and comes jumping in on it and opens up short positions, which is risky as hell, um, and they have the order flow, right? They know exactly what's going on. Like these people pay for that information, so they're going to know exactly how many retail people are short the stock, how much retail is buying puts, how much, and they know that these same people that hate Robinhood, retail that hates Robinhood, are long on GameStop and AMC and everything else. So if there was going to be some manipulation, and they know that where retail stands, they'll absolutely either tank the stock or make it rise. That's my tinfoil hat theory. So I'm staying away from Robinhood. That's my closing statement for today. Love you guys. Thank you for coming in. Appreciate everybody for coming in and spending the morning with me. Today was one of my more tired days. I never didn't get too much coffee, but I appreciate you guys sitting through here and sticking it out with me. Have a good luck for the rest of the market. Make sure you check out Tar Heel Blue later on. And if you didn't already, check out the what was it? What did I call it? I can't even think right now. Chalk Talks with Coach B. I did two topics yesterday. If you have any ideas for any other topics, throw them on in the comments on those videos. Basically, I'm gonna make a couple videos a day just for like 5 to 10 minute quick videos explaining something. And again, if you ask for something that I don't know about, I'll spend the time, read about it, and figure it out. And that's just going to be quick videos explaining different stuff about the markets, trading, options, whatever you guys want. I'll go in there and make them, and I'm going to try to create like a little library. All right, guys. Thank you. See you tomorrow morning.